You find yourself owing the IRS or state money, perhaps a lot of money. How do you take care of this? What are your options? Hi, I'm Gary, and welcome to Tax Bulldog for the best thoughts and ideas for trimming your tax debt. Now, these videos are to help you to help yourself to avoid costly professional fees. If your situation has a level of complexity, then you may want to consult a professional. These videos will at least give you an introduction of what to expect and to know when someone is just conning you. If you feel you need help, see my video on selecting a tax professional to represent you at this link. Now, in this video, I'm going to discuss an overview of installment agreements. I will make references and display some links on the screen, and I will also list these in the description below. I will cover each of these options in a more in-depth video in future videos. Number one is a guaranteed installment agreement, when you owe less than $10,000 and can pay it in less than 3 years. Two is a streamlined installment agreement, if you owe less than $50,000 and you can pay it within 6 years. Three is a regular installment agreement, and that requires full disclosure and is based on determined ability to pay. Then a partial payment agreement is based on the remaining statutes. Graduated agreement as it starts out low and increases over a short time. Now, in this I make references to the collection statutes. This is in regards to what is called the collection statute expiration date. IRS collection statutes run for 10 years from the date the taxes are filed or assessed. It is not based on the tax year due dates. There are several factors that can extend these statutes. Any event that puts a hold on the IRS ability to collect, filing of a bankruptcy, filing of an offer in compromise, a consent by the taxpayer to extend the statutes by filing a Form 900, sometimes there is good reason to doing that, or any other event that puts a hold on the IRS's ability to collect. Statutes will typically be extended for the amount of time that collections was barred by these actions. Now, the guaranteed installment agreement is very simple and for when you owe less than $10,000 and you can pay it off within 3 years. The streamlined installment agreement is for when you owe less than $50,000 and you can pay it off within 6 years. Now, there are two options in this one, depending on how much you owe. If you owe less than $25,000, it's very easy. You can get an installment agreement as long as you propose a monthly payment amount that will pay it off in 6 years or less. For example, if you owe $10,000, you would have to propose a monthly payment amount of $139 per month. That's $10,000 divided by 72 months, and that equals $139. And that's rounded up to the nearest dollar. It's best to round up the payment to the next $10 level. In this case, it would be $140. Now, two, if you owe $25,000 but less than $50,000, you can still get a streamlined agreement. The payments are still required to pay off the tax debt within 6 years or less. However, for this one, you'll have to provide some financial information to show that you don't have any liquid or disposable assets that could pay off the tax debt right away. For this, you may be asked a few questions, or you may be asked to complete a Form 433-F, which is a collection information statement. A Form 433-F is a short financial statement. Now, a regular installment agreement, this is for when you owe more than $50,000 and you don't qualify for any of the other plans. This gets more involved and you will want professional help. This is a full disclosure statement and it's based on the determined ability that you have to pay. You will complete a Form 433-F or 433-B for business. These are collection information statements. Your information will be reviewed in detail. The IRS applies financial standards on allowable living expenses to assure that you are not living so lavishly that it impairs your ability to pay. They review your liquid and non-liquid assets to determine what can be liquidated to pay on the tax debt. They will also take a look at liquidating unnecessary assets, such as boats, second homes, recreational vehicles, motorcycles, etc. That's to pay the tax debt. A monthly payment amount will be determined, and that is what they expect you to pay. If you disagree, you can protest or appeal the findings. Now, for a partial payment agreement, this is where your determined payment ability will not make it possible for you to pay off the tax debt within the remaining collection statutes. The IRS will make a complete analysis on your ability to pay. Then you will make monthly payments until the statutes expire. At that time, your remaining unpaid tax debt vanishes into thin air and you no longer owe it. This agreement can be subject to review periodically to determine if your ability to pay has changed. With a graduated installment agreement, this is for when your determined ability to pay is greater than what you can realistically do right now. You may have some expenses you cannot get out of quickly without causing hardship or significant loss. Perhaps you need to sell your home and find a cheaper residence. Perhaps you have a child in a private school or college and you need to finish off the school year or semester. You can request a lower payment for up to 1 year. That gives you time to rearrange your financial affairs to meet the payments that the IRS requires. After that, your payments go up to what is determined to be your ability to pay. Overall, you must still be able to pay off the tax debt before the collection statutes expire. So in summary, a recap of the types of installment agreements. One is the guaranteed agreement, when you owe less than $10,000 and you can pay it in less than 3 years. 2 is a streamlined agreement, where you owe less than $50,000 and can pay it off within 6 years. The regular installment agreement, which requires full disclosure and is based on a determined ability to pay. The partial payment agreement is based on remaining statutes. And the graduated agreement is where it starts out low and then increases over a short time. Now here are some resources. TaxBulldog.com. This is my website where I've got many articles, documents, forms, and other information in regards to dealing with collection and audit issues. I try to demystify things. /IRS Back Taxes book at this link. The IRS on YouTube at this link. And this is a treasure trove of helpful videos for taxpayers. It's very good. The IRS on tax scams. I'll put the link in the description below because it's too lengthy to put on the screen here. But this is what to watch out for and the games that scammers play to steal your money. They're very good at it because they are professional thieves. So in closing, thank you for watching this video. If you liked it and you got something out of it, please give me a like and share it with your family, friends, and colleagues. Please subscribe to see my future videos as I produce them so you can be aware of topics that may be timely and important to you at that time. Also, from time to time, I will update the descriptions in my videos as I add other relative videos and information as an update. Check back often if you need more information. I may have something new for you. After a period of time, some of the tax laws, regulations, processes, and procedures can change. After a period of time, some links may expire as content is changed or removed from the web by others. Thank you.